Share Shootout, brought to you by Lion of Africa Insurance, insuring South Africa's future.
Welcome to another fast-paced, brutal and unforgiving edition of Share Shootout here on CNBC Africa. I'm Bruce Whitfield, judge, juror and executioner here on the most vicious stock-picking show on television. Welcome to the show. Now, we don't know whether Barack Obama will be arrested for war crimes when he arrives in South Africa. Will Julius Malema's new political forum cope? And do we really know the recipe to Sally Williams' nougat? We don't know the answers to any of these questions, but what we do have is another Williams rumble in the urban jungle of Johannesburg. Again, fair warning, we're not talking tennis, so if you're hoping for cross-court shots and short skirts, you're fresh out of luck. Well, fresh out of luck on weekdays anyway. We don't know what they get up to on weekends. So we'll introduce the champion with a perfect score of 3 wins and no loss, Roger the Rabble-Rouser Williams, and his challenger today with a perfect record of 0 appearances and therefore no losses at all, Lance, I've never taken an illegal substance in my life, Williams. Gentlemen, please, will you step into the set? And before we go any further, you're a dark horse, Roger Williams, because you won this game 3 times, and only today do you tell me that you are the progeny, all of you, of Sally Williams, the mother of the nation's nougat.
Yeah, absolutely. We eat a lot of the stuff. We love it.
It's very slimming. Obviously, nougat is very good for you. What did Mother Williams think about the show last week? Well, Sally Williams, we spoke to her, and she said whoever loses today has to repaint her patio. So over the next 30 minutes, both our stock pickers, brothers, will fight it out to avoid family chores, but there won't necessarily be a shortage of family feuds. And also, the title of Share Shootout King. Both of our guests are pre-picked shares. They're keeping those close to their chests, as am I, because Roger's been known to read over my shoulder. Neither knows what the other holds, but at some point during proceedings, they must accept at least one of their competitors' stocks. The longer they leave it, the more likely they are to have to accept something they really don't like. Each has got 30 seconds to argue their stock pick, so let's let the Share Shootout begin. Should we be mean or should we be fair?
Let's be fair.
Okay, you go first. Now, you've been desperately trying to guess your brother's stock picks. I don't know whether or not you've got them right, because I'm a fair player here. What do you think his 3 stocks will be? Let's see how well you know him.
Well, I know what I've chosen before. It would have been Lewis, but that's already off.
Okay.
I think Santam will be on.
You think Santam will be on? What else do you think will be on?
I can't guess the others.
Okay, so he's a fan of Santam, is he? Well, let's see whether or not he is true to form. What do you think Roger will choose, Lance?
Some esoteric shares.
Yeah, you're absolutely right.
I have no clue of knowing about.
You don't know the inner workings of your brother's mind, which is often best that way in terms of family. Right, so Roger, your 30 seconds on your first esoteric pick. It's an incredibly courageous pick. It's a night out on the tiles with ILIAD Africa. 30 seconds start now.
If you speak to any estate agent at the moment, you'll hear that stock is scarce. And what I think this is indicating that the housing market's poised to go up. And ILIAD is a great play on this. First of all, it's very cheap. It's on a P under 10. And also management have done a lot of work clearing up the balance sheet and ridding themselves of loss makers. I see a recovery in this business from very low margins of 2% to 4% over the next couple of years. And I think the share could yield over 25%.
Okay. Now, ILIAD Africa, of course, they own, amongst other things, Ferreira's is probably their best-known asset. I mean, that's go by bathroom taps and baths and tiles and all that sort of stuff. So the home renovation space or the home building space at the top end is where you're going. Otherwise, you go for cash build. What do you think, Lance, of your brother's first pick of ILIAD Africa, a dog for the last 5 years of the property crumble?
I think it's in a very difficult space at the moment. They do have a little bit of indigestion from a lot of the acquisitions that they acquired in the heady days, and as Roger says, they've taken a lot of pain in cleaning up the business. I think there's still a fair amount of that to come, unfortunately. And the other overriding fact is it's a very competitive market they're in. There are formidable players in that space. Cash Build is one you mentioned. Massmart's been very aggressive in that space. Spar's in that space through Build It.
Interesting point. I mean, they do have competitors. This ILIAD isn't, 10 years ago, 15 years ago, they didn't have Massmart in that space. They didn't really, I mean, Cash Build is a different market segment to the core focus of ILIAD. But there are more competitors in the market than there were in the last boom.
There are more credible competitors. I think they have responded. First of all, they're similar size to all those competitors except Massmart, which is bigger. Their margins are low, so I think they are competitive. They're taking out costs and really, they've really been restructuring the business for a couple of years. It's still another year or two to go. And they just sold a loss maker, which is going to boost earnings. So if you take that out of the mix, the P's just over 8. And the margins are very low. They're about 2.5%. I think in a more normal market, possibly they could go to 4.5%.
Lance, Roger's depending on a recovery in the property market. We have had probably the lowest interest rates in the last lifetime, 40 years plus. Yet the property market has not boomed in that low interest rate environment. Roger's betting on a boom in what is potentially a rising interest rate environment. That's pretty gutsy.
That is gutsy, and unfortunately, the interest rates have really been to stem, I think, further losses in all aspects of the capital markets. You're starting to see a change in the interest rate cycle globally, and I think, unfortunately, South Africa, especially with the rand, is going to have to follow.
I take it. You're cocking and you're shooting down.
Shooting this one down.
Awesome, excellent. He's got the spirit. You've taught him well. He's watched the last couple of shows. You've given him the yes. You've given him the spirit. You're wrong on the first stock pick this evening because Lance Williams, very courageous from iCapital. Tell me why in 30 seconds you like Invicta Capital. Invicta Holdings.
Invicta is South Africa's largest industrial distributor. It's got a very strong management team. They've been very canny with their acquisitions over the years. The three main divisions are Bearing Man Group, Capital Equipment Group, and Building Supplies, but that's very small. They recently bought Cayenne, which is a very large Singapore, used to be listed on the Singapore Stock Exchange, distributor of heavy capital equipment globally. Mainly with debt, they bought 75%, with management 25%, so further upside on that side.
Okay, let him go over because I interrupted him. You like Invicta, I think, don't you?
Invicta.
This is a fast-paced show. We have less time for thinking, so let's talk.
Invicta has produced the goods. I just don't know the
Good
market
results this
saying.
week. Good results last
credible
week.
results. I mean, not exceptional. I don't think they're exceptional. They're decent. It is on a 13p. The cash flow is not that exceptional because it's very working capital intensive. What worries me, I think they did go into a kind of structured dividend deal. There may be a tax liability on that. I don't know if you can shed some light on that.
I think they took proper advice on that, and there is a risk there, but it really was to accommodate the Black Economic Empowerment transaction. So I think they'll get over that, and the upside in the share from their spread of assets, the international diversification, I think overrides that small risk of the structured dividend transaction.
That's got a slam dunk, Rog. Boom, straight back at you.
Just which competitor had a major SARS?
Hudayco.
That's correct. Yeah. Isn't it exactly the same? So why should they be in a better position?
Well, Hudayco hasn't been settled yet. Hudayco is accused of not paying its taxes properly, and SARS is still prodding around.
I just see that as a major liability to Invicta. The P of 13 on an industrial company, really a distributor, I think is relatively high. I don't think they've got any experience overseas, and I think that's very risky. I think on a 13p, I wouldn't buy it.
Okay, so you're shooting it down.
Yes.
Kaboom, you're gone. Let's see, that's how it works.
Yeah.
Brotherly love, Sadungus. All right, there are no holds barred on the show this evening. We've got two brothers. One is called Lance and one is called Roger. They are the progeny of the far more famous and somebody who's produced far more use and more value over time, Sally Williams, the Nougat lady. You know who I'm talking about. And other than, of course, her production of You Lot. So many of you. There are four of you altogether, aren't there?
Yeah, four of us.
Okay, we need to get your sister on next time. All right, Roger Williams from Centaur. Your next pick is a 50 billion rand holding company of some of South Africa's sexiest financial assets. Why go for RMB Holdings, RMBH, as opposed for First Rand or RMB Insurance? 30 seconds start now.
Rand Merchant Bank Holdings really owns First Rand. Rand Merchant Bank, the reason I go for that as opposed to First Rand, you've got the option of the founders possibly selling out to a foreigner at a premium, so I'd rather go in there than First Rand. If you look at the track record, they've grown earnings per share 13% over the last decade. It's on about a 5% forward dividend yield. I think currently the share price has come off. I think this is a good entry level for a quality company with a good pedigree.
Okay, and in, of course, RMBH, there's Discovery's in there as well, 25% stake in Discovery, isn't it? Or that's gone into insurance. That's gone into
Yeah, they've got out of all the insurance,
Okay.
just a pure holding company of First Rand.
Okay, so it's a pure holding company of First Rand. I've been fascinated to watch the share price performance since the 20th of May this year of First Rand. It may be purely coincidental, but if you'd invested 100 Rand in First Rand on the 20th of May this year, your 100 bucks is worth about 85 bucks now. So that's in a month, we have seen a 15% decline in the share price of First Rand. The other banks are down between 7 and 8% on average.
Yes.
Why has First Rand underperformed to this extent? Is there a correlation with the 20th of May, the day that Michael Jordan stepped down or announced that he was stepping down from First Rand? That's a big smack, the Jordan premium in First Rand.
I think what's happened is people are anticipating a turn in the interest rate cycle. If you look at
that excuses the 5 or 6% decline in the other banks.
Yeah, but I
First
think
Rand
the
has
West Bank
outperformed
component
twice.
is more.
There's more gearing towards West
Yeah, I
Bank.
think it's maybe slightly more exposed there. I don't think it's really the Jordan effect.
Okay.
And it has performed much better. I mean,
Don't hurt his feelings.
Standard.
he's feeling sensitive at the moment. He's leaving a job he loves. Okay, but yeah, so West Bank maybe amplifies it, but all the banks lend money to people who want to buy cars. West Bank happens to be the biggest in that particular point. Okay, RMBH, interesting bet on First Rand.
Yes, essentially it is a bet on First Rand, so you have to look at the fundamentals of First Rand when you talk about RMBH. I think they've had a very free ride from their competitors in the market space in the last 5 years. FNB have taken substantial market share from their local competitors, and I don't think that will continue. I think you're seeing the competitors up their game.
Well, suddenly, recently, Standard Bank has come to market and said, we've got a whole bunch of innovations. Look what we're doing. We're doing an FNB. Yeah, practically the same stuff. Fuel rewards, all of that sort of stuff.
Correct.
Completely shameless mimicry. But the point is, what they've created can be copied.
Yes.
There's a lag, but the competitors are copying them.
Yeah, listen, I think it takes a while for these new competitor innovations to gain traction. And, you know, if you look at the scheme, it's not kind of what you see is what you get. You kind of earn rewards points and then you can redeem them for other things.
But you know what it is, Roger, and it is, up until now, there's been no excuse for people to stay with their bank because FNB's just made it so sexy and so cool and so funky to go over to FNB.
Yes.
FNB has stolen market share. Suddenly, FNB, Standard Bank's doing a rewards program, so maybe I won't bother. And it provides a catch net. Even if people don't use the reward scheme, suddenly my bank isn't as awful as I thought it might have been. That's where suddenly they lose that advantage. And unless, like Apple a little bit, like Apple under Steve Jobs, suddenly the innovation pipeline in Apple doesn't look as sexy as it used to. I wonder if FNB doesn't suffer from the same disease.
I think, listen, it's a bit too soon to call. Standard just launched
I like to be ahead
their
of
scheme last week, whether it will take off.
Okay.
Discovery, I mean, their rewards has been exceptional.
Let's see if Lance accepts it or shoots it down.
I think they're better picks in this space. I think there's some of their competitors.
Even at a 15% discount to what it was a month ago?
Yes, because their competitors are maybe even cheaper.
Who would you buy?
I would buy Standard Bank. I think their Africa strategy is very strong. They've got a good franchise there, and that will come online. And higher interest rates actually favour Standard Bank versus First Rand.
We have to pause there. As much as I'd love to hear the hypothesis, we have to stop it there. You've been shot down, Roger. Don't just try it. Try your eyes. Okay, you'll get over it. Okay, your brother thinks that you're entirely predictable, Lance Williams, and you are. 30 seconds on Santam, please.
Santam is South Africa's leading short-term insurance company. The company has fundamentally been changed over the last 10 years by very, very strong management. It's moved from being a traditional South African business to a completely representative South African business. They're very strong in general short-term insurance and then also very strong in niche insurance with specialist businesses. They're very strong on capital management. They've produced since 2006 42 Rand in special dividends.
They've been a great dividend payer historically. Yes. Now, you knew this was coming because you know your brother. All right, Santam, you've got to accept it. It's been a great performer. Ian Kirk very firmly in charge.
Yeah, I think management are very good. I just don't know if the nature of the industry has changed. If you look at the personal lines business, it's mostly moved, a large portion has moved to direct. So you've got Outsurance and Auto and General, which I think control about 40% of the market
And
combined.
Santam now owns 100% of My Way.
Exactly. So this is undermining the margins of the traditional business, and I don't think they really are competitive. So my real concern is, I think the book value is just over 40 Rand. I don't know if you recall what the book value is.
It is at quite a high price to book, but they've made their capital structure a lot more efficient over the years. So
And also, here's a business which 80% of its income comes from the business market, comes from covering factories and offices and all that sort of stuff. It's got a very small consumer component.
Consumer's big. I think it's half of their business.
I thought it was only about 20%. That's what Ian Kirk told me once.
Maybe of their profits.
Maybe of their
but not of
profits.
their revenue.
Okay.
I think also the business market, I know OUTsurance are expanding in that area, and I think that will be under threat in the future, maybe not in the short term. The professional indemnity, also other competitors can come in. I just think, I'm not sure whether their margins are going to be as good as expected. I think the markets, I wouldn't buy it at this price.
You're shooting it down?
Yes.
Okay, yes. Quite tentative, quite nervous.
yeah, this one's a hard one.
Because you don't know what he's got next. Oh, you're so brave. This is Brothers in Arms this evening. We'll take a short break. Be back in 2 minutes. Stay tuned to watch Sadie Williams' boys battling it out to who will not be painting their mother's patio. We'll see you in a bit when we come back with their third pick. So far, Roger has rejected Lance's Invicta and Santam picks. Cautious on Santam because he doesn't know what's coming up next. Roger picked ILIAD and RMB Holdings. Both of those have been shot down. Brave Lance as we go into the final stretch here on the tour to Shootout.